Hi every one of you. Now we are going to see how to achieve our financial goals. This video is only an awareness purpose. Now how we are going to break this down. There is some data which is being taken from RBI portal which I will share it to you guys. Similarly, I have taken some data from couple of other websites related to FD interest rate from 1970 till date and inflation versus interest rate. Those data have been taken screenshots from reliable sources which I will share you guys. And on the other half of the video, we are going to see whether we can eliminate these inflations, whether we will be able to mitigate this inflation, or what we have to do to mitigate this risk of inflation. Now, what we are seeing is the data which is being taken from the RBI website. This data consists of major banks' term deposit interest rate. If you see it from 1991 till 2011, we can see the consistent reduction in the interest rate. And I cannot find more than 2011 data in RBI portal. So I have taken another website as a reference. Here, if you see the FD rate of interest from 1970 till date, it has been a consistent reduction in the rate of FD. There was a peak of around 12% of interest rate, wherein now we are getting around 5% of the interest rate. It varies from bank to bank obviously, but nothing more than 5.1% to 6%. Now we are seeing the inflation versus the interest rate in the savings bank account. From 2012 till 2021, what was the inflation versus the interest rate that is being given by the bank to us. If you see, there has been a consistent reduction in the savings bank interest from 2012 to 2021. If we see somewhere around 8%, currently around 3%, 5% of the interest from the savings bank account is being reduced. But inflation wherein keeps on floating between that 8% range to 4% range. This has been the consistent inflation rate over the period of years. When our inflation is around 4 to 8% and our savings bank interest is less than 4%, how are we going to mitigate this risk? Because there is inflation keeps on increasing, wherein our savings rate keeps on decreasing, then we don't get enough amount to beat the inflation. Here we have to start thinking how we are going to mitigate this particular risk. And if you take from 2012 to 2021, 5% of interest rate has been reduced in the over period of 9 to 10 years. And from now on, in the next 10 years, what would these interest rates be? Maybe 0.1% or no interest rate. Here comes the various methods or instruments that we need to invest to mitigate this particular risk. Before going into the mitigation part of it, whether we can eliminate this risk? Definitely not. We have to concentrate on how to mitigate this particular risk. Yes, there are 6 different methods where we can mitigate this risk better. One is investing on gold, investing on liquid funds, investing on stocks, doing investment on mutual funds, real estates, and there are certain savings bank account which gives you more the interest rate than what we have seen in the graph. So we are going to look into it. What are those kind of investments and what are those kind of a savings bank which gives us excellent return on investment? But again, we have to be very cautious with these banks and invest only according to the RBI rules, so our cash will be protected. As we have seen, there are 6 investment methods which could mitigate our risk. Can we go ahead and do all the investment right away so that we can mitigate this risk completely from our life tomorrow itself? No, that is not possible. All the above 6 investments requires proper planning, discipline in investment. Some of these instruments are directly proportional to each other in terms of growth, and some are inversely proportional in terms of growth. In our next video, we are definitely going to see which of these 6 instruments are directly proportional to each other and inversely proportional to each other. So we are going to invest our hard-earned money into these 6 instruments at the right time to maximize our return. Hope you people are waiting for those videos. Sure, we will catch it up soon. Thank you for watching this video. If you feel these videos are giving you a good information, do like, subscribe and share it to your friends. Thank you. Have a great day.